Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Vick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. We got busy show today. Man, turns out yesterday was a buy the dip day. Who would have thunk it? I didn't, and I guess I'm paying for it this morning. So yeah, buy the dip seems to be back as the theme. So that'll be the theme of the show today. We got some individual movers, but that's the general theme of things. We have two guests as well. Marc Chaikin will join us at 8:15, and Paul Mladjenovic, author of Stock Investing for Dummies and the Raving Capitalist, he would join us at 8:35. Joel, back in the saddle in BZHQ. How's it going this morning?
Good to be back in the world headquarters here. The rally continues, trading up 11 and a quarter handles here at 58 and a quarter. Your pre-market high, 26.67. I have absolutely nothing up in that area. On the downside, a little bit more of something to lean on. You do have the close at 47 even in your low right in that area at 45 even. The pre-market low was 44 even. Looking at the crude oil market, crude in the red by 11 cents at 63.26. Gold, man, at 1350 is just a tough level to get through. We're trading in the red by 740. Silver's in green just by a penny. And what I see, Bitcoin is at under 7,000. I'm looking at the Bitcoin futures here. Under 7,000 at 67.70. Dennis, boy, oh boy, what a rally yesterday.
Oh, wild.
Buy the dip.
Yeah, you know what? And it was a turning point for this market because in the face of bad news, they came and they kept buying stocks and buying stocks. You could kind of feel it at the open. It actually helped me because I started to buy a few stocks just in my day trading portfolio there. Just because we weren't going, we opened low and a lot of stocks, I looked, man, that opened at the low, that opened at the low, and a lot of stocks opened at the low. And I'm like, oh, we could be one of these days where we open right near the lows and just rally. Didn't hold on long enough. I figured we might get, some of the losses back, maybe possibly get to settlement. I had no idea we were going to end up blowing through it by like 300 Dow points and have a 700-point Dow point rally from the lows of the day. So incredible movement for Mr. Market there. Very impressive. This is, I think, a turning point. This was a turning day yesterday. That with the jury was out, we had talked about the inside day the previous day, and were we going to challenge those February lows? Well, we opened near this the low of the move there, and we challenged and we passed. So that is a turning point. So that is the consideration here now. I think you do change from the sell the rip to the buy the dip, and if you get pullbacks here, I think you will find buyers. So I've been saying all along, I don't think we're out of the woods. I think now it looks like we're a little bit out of the woods.
I think the street is just kind of looking at, what he's doing kind of is just like a negotiating, tactic here, perhaps to get, some kind of concessions from the Chinese. How much is China really going to want to, fight with us or mess with us? I mean, we are dependent on them. They do hold a lot of our debt, but, who buys a lot of their products? So perhaps the two head of states there are cooking a little something up to keep the markets buoyant. The only thing that concerns me at this point is the volatility. The average daily range now and the 9-day average trading range is up to 59.25. That's more symptomatic of, wild swings, increased volatility. It's not an indication of that slow climbing bull market that we had last year.
So you don't think we're out of the woods yet?
I just like to see I'm not saying we're not out of the woods. I just like to see the volatility come down, because when there's volatility and uncertainty, there's always that. And once the vol comes back in, then I'll be a little bit more.
But the market is obviously a leading indicator. Volatility always seems to chase it. So I just think yesterday's tape was very impressive. I was so impressed. Like none more than Tesla. Here we had a stock that was really out of favor, showed a little bit of life the day before, and then again, getting hit hard on the potential tariff stuff, opened right near the low yesterday. And if you were buying right off the hop, you were rewarded big time on Tesla, because it opened down at the lows near 250. Or what was the low yesterday? I'm just trying to grab the ticket itself.
52 even.
Yeah. It opened right now near the lows and opened 252.78. You only took 78 cents of heat, which the Tesla is nothing, and closes at 286. That is a TSN turning point. TSN is a big sports network in Canada, so all the Canadian listeners out there will know what I'm talking about when I say TSN turning point. That was a turning point for, not only Tesla, but somewhat for the overall market, because this stock was a laggard, dragging down, adding more fears in the overall market. And wow, what an impressive move. So I'm more bullish. I've turned the clock here a little bit now. I'm not saying go and chase this rally. What I'm saying is on the dips now, I'm going to be more prone and inclined to buy for trades as opposed to selling the rip.
Okay. All right. The Tesla did have some nice follow through. If you were using a 250, which is, a psychological number, you did take some heat. 44.59 was the low of the move. Hit yesterday, 88.37. So we are trading in the green here, but haven't taken out yesterday's high. I would look for some more follow through if, in fact, we could take out yesterday's high. And, that 300, it was support for the longest time. Let's see if it starts to act as resistance if we can take out yesterday's high.
Stock Jock is requesting to go over the specific weekly chart of the SPY. Let's do that and just see what I'm looking at here too. I'll give you my technical thoughts first, and then we'll let Joel jump into it as well. And I might take some of your information here, Joel, because you have been talking about these February lows for a long time. We obviously didn't get down there, but you almost could see the pattern now forming when you look out a little bit further of that long-term double bottom. And we went down in February all the way down on SPY to 250 or 252.92. Had the wicked rally up to 280. We know we didn't make a new high on that move, and now you came down and you got the 255. I'm going to call that good enough for a double bottom, and it looks like we're bouncing away from it now. So the technical pattern looks a hell of a lot better today than it did just a couple days ago.
Yeah, I'll definitely agree with you with the double bottom on the weekly charts here. The one thing, though, that's concerning here is when you made that low in February, your rebound got you up to 28.07 and a quarter. Now we're peeling back. We're making some lower lows on the weeklies, and the rebounds are not quite as robust. So I think really eventually we're going to have a trading range here, right? Eventually this has to calm down. And maybe 2,600 to 2,700, because they seem to really scoop it up under 2,600 and haven't been over 2,700. We haven't been over 2,700 since the week of the 23rd. So I think eventually things are going to calm down and consolidate between, I'll say 2,600 and 2,700. I know that's a 100-point range, but when I'm just looking at the weekly, Dennis, come on, look at the weeklies. I'll do the SPY here.
Sure.
It doesn't look that great. It really
Why? Why doesn't it?
Because you made a high, an all-time high. You came down and made a low in February. Yeah. You rallied back. You didn't make an all-time high.
Yeah, and that was a tell to go down, which we did.
Okay.
After that, 280 to 256.
All right. And then
don't you think you've kind of got a little bottom forming here now near those old February lows?
Yeah, I do.
I'm looking for the W. That's always you get that W going. And, this is just, and I'm not a huge technical trader. We know that. We always go to Joel mostly for the technicals because I'm an order flow guy. But, I do respect the technicals. And I could see the potential of this, little W starting to form here. So, you get that little bottoming pattern. If we can get back up there, I just see the potential here for a double bottom.
You do. Double bottom. There was a double bottom on the dailies. They're really protecting that February low. Just for me though, I'd be more convinced if we got over 2,700 and closed over 2,700. That's that's what I'm thinking. But definitely the W pattern here, I can see it with you guys forming a lot of weekly lows in the same area. So building a base. So I
like it.
Yeah, I like you got to like the volatility. You got to like the two-way action. I just don't, after you made the low, you come up, you stop short, made another low in that same area. I just don't see us going right back to 280 here in the.
Well, I don't think we're going to get right back. There's going to be people who are still spooked and want to get back out, but I could see it over the course of the next couple of weeks getting back to 280. I almost feel like there's a bet coming on here.
What do you want? You want?
I like 280. So if we did that, we're at 265 this morning. So, I can even give, 265, basically 265.43. But, 280, if you need the 40 cents, we can figure that out too. But, 280 versus 250 is looking like, a pretty good bet here for me.
Boy, that's a real long-term one here.
Not in this market. It could be there today. This market moves around 100 S&P points a day.
You know what? I'm gonna wait. I'm just
you
gonna
can't even get the bear.
I'm just gonna wait because I lost that other steak dinner by 7 points on the 2,800. And
so then he got back to lunch on Square.
Yeah, I got back to lunch on Square, but no.
Which I just missed. You would have really been buried.
I'm waiting. I'm gonna wait for another day of rallying, and then I'm gonna stick you. I'm going to wait till we get to 2,700, in the spoos.
Let's try to give me 26 versus 28 so I don't come down all the way. I think we hit the 280 before we hit the 250, before we make new lows. And I think there's a potential for that W form. And I got my bull hat on. I even put it on today. I haven't been wearing a hat, but I put the Tigers bull hat on, even though the Tigers are terrible. But I put the hat on. I got my bull hat on here today. So not chasing this move, though. I want to stress that. You got to watch chasing in this market. Buying pullbacks now as opposed to selling rips. I'm always, as a trader, I'm selling rips or buying pullbacks. I'm never chasing. So right now you've ripped. I mean, we have ripped for 2 days straight. Or not for 2 days straight, but for, this day, for yesterday, ripping all day, and now the follow through this morning. So there will be some buyer exhaustion in the short term here, probably happening, relatively quickly. But that being said, good tape yesterday. And if you're a swing trader here and you got a longer term time horizon, I'm buying the dips.
Okay. All right. Well, we'll wait. I'm back in the office first time here in almost a week. So
I could be right. I mean,
there's a trading range coming up. I just,
maybe I'm getting suckered here. Maybe I'm getting suckered and the spies are rallying even more. Maybe I'm getting suckered, but I've got my bull hat on again. So looking for pullbacks to buy.
Yeah, just wait.
Speaking of pullbacks to buy, you want to know what the pullbacks to buy were yesterday, and I I had my chances here on Lennar. That was an unbelievable move in Lennar yesterday, and we talked about it on the show. And I said, I popped initially on the earnings, and I shorted some stock because I'm like, you know what? I just think this is the sell everything rally. And Lennar came back in. It was trading down $1 in the pre-market, actually. Went back to scratch and then started looking up again. I was like, you know what? I don't like this now. So I actually covered. I think I took a small loss. I only lost 10 or 20 cents. And I covered, I think my covering price was 58 in the pre-market. It opened at 58.53, so opened 50 cents higher than that. And it just ran all day. But because Lennar was opening higher, I was like, you know what? I'm going to buy some of these other home builders on the pullbacks. I bid them all. The only one I got was DHI. So I bid them all, but a lot of them opened only down like a dime. But DHI opened down a little bit more. And it ran all day. Obviously, day trader in me, I got out way too soon. I got it in the 43 handle, went through the 44 handle, went through the 45, well, almost through the entire 45 handle too. But the home builders, that was a great quarter. We talked about the quarter being great. It was just reporting on the wrong day. And then the day turned around and Lennar led the way. Wow.
And there's just a couple of cues there. You talked about a trade that you're in. You weren't comfortable with it. You covered it.
I said that on the
I'm
like, I don't know if I should be in it.
Well, I
looked at it. A little bit gutsy to short a stock on that good of a report.
I looked at it at like midday, and I'm like, oh man, I can't believe
you're hoping I got out.
I'm like, I hope Dennis is not going to be complaining about.
I covered about 9:15 when it started to go back. It went down, it went red, and then it started to come back up, and we were still way down the spot. I'm like, they just want to buy this. I'm like, the report is too good. So there was a big offer of 58. And I covered under that, and then they took out that offer of 58 and gone, so it just kept going.
Right. And you used it to trade other stocks in the sector, so taking a losing trade and turning it into winning trades in other stocks. That's good trading, Dennis. That I taught you well.
All right, 8:15. I'm going to bring Marc Chaikin in on the fly.
Do it
if I can. So Marc Chaikin joins us every other week usually. Chaikin Analytics is his site. He's got
it worked this time. How are you?
Hey, good. How are you, Marc? You're live. How's it going?
It's great. Just great.
Thoughts on yesterday's buy the dip rally? That's kind of been the theme of the show so far.
Very, very positive for a W bottom being in place.
Oh, he's got us.
It shows,
That's what I just said.
News...
Were you listening to us? Were you listening to us?
No, I'm deep into
I just gave a 2-minute rant on the
meditation
W.
routine.
I just gave it 2 minutes.
Come on.
I even put my bull hat on.
That's unusual. How does it feel?
No, it's funny you just said the W. I just got excited when you said that because I just talked about the potential of it for 2 minutes, the W format. So you see the same thing.
I do. Are we on the air or off the air?
Oh yeah, you're live. You're live.
Oh my God! I'm glad I was politically
glad you
correct
didn't use
here.
any of that street language.
No, right. Well, I'm in Philadelphia. The street language here is a different kind of street.
Oh, I don't want to talk to my.
Now, I am bullish here. Obviously, with this type of volatility, it's hard to go flat out buy them. But when you get a news-oriented break like you did yesterday, and you see the market come back like that, that's really confirmation. And more importantly, it came within the volatility bands that we look at. All the other lows have come outside the volatility bands. That's the way a W takes shape. I'm sure you talked about that. Also, 2 to 4 months, typical time for a W to form. And I think the most important thing, if you didn't cover it, is you go to a new high within 3 months of the final low. So that's pretty encouraging for investors with first quarter earnings seasons coming up starting next Friday with the major banks.
So, Marc, what about the Chaikin? Talk about the power gauge here. Which stocks are lighting up here on this potential for an overall market bottoming?
Surprisingly, consumer discretionary. That
really
is a sector that's, it's been led by Amazon, so nobody's been paying any attention to it because, and we've been writing it off by saying, well, Amazon is 20% of it, but it's actually being driven by retailers. So Kohl's, Foot Locker, Macy's, Ross stores, these are bricks and mortar retailers that are really starting to turn around. And then home builders led by Lennar's unbelievable report yesterday. So you've got some consumer-oriented groups within consumer discretionary sector that I think are starting to reflect the fact that the economy is strong, jobs are plentiful, wages are going up, and the labor participation rate is high. So home buyers were cited by Lennar yesterday as saying they're not as concerned with the rising interest rates as they are with job security, and they're feeling very secure in their jobs right now.
Let's jump over to some individual charts, and just moving here this morning is pretty much everything getting follow through here. But what was interesting is Facebook didn't participate as much as some of the other stocks, but it is participating big time this morning. I will argue it is leading the charge. Facebook is up $6 here this morning. Obviously, we had a lot of commentary from Zuckerberg there yesterday after the bell, and they are liking what he was saying because it is trading up big time here, leading the market's 2-day rally. Facebook, what do you think?
Well, I think I would rather either avoid it or sell it on a big rally here. They do report on April 25th, and my guess is the numbers are going to be great. The question is the attrition rate and whether they've lost the confidence of the consumer. It's great that Zuckerberg finally came clean and spoke to the magnitude of the data leaks, but I think people are starting to sour on it. One thing that is not being talked about that I think is a big negative is they don't have to go after Facebook in terms of regulation if they don't want to. They can just say, let's split it up. They have the 4 of the 5 biggest social apps. So it's not just Facebook, remember. It's all those other companies that they bought to stifle competition. The government could say, okay, we're not going to dig our hands in deep here, but we want you to spin off a couple of these other companies. That would eliminate their monopoly position. That could be very serious.
Hey, Marc, I just want to go back. Oh, go ahead, Dennis. I'll let you start.
No, go. Sorry, Joel, I interrupted you. Go.
All right. No, you talked about the volatility, and you say it will continue to be a factor. I mean, I have a 9-day average trading range here for the S&Ps at close to 60 handles. I mean, what is it going to take for the volatility to come down? I mean, I just think with that kind of uncertainty, as far as the overall direction of the market, I mean, you got a jobs number coming out on Friday. Is it, the worries over 2 interest rate hikes, 3 interest rate hikes here? What is it going to get us? I mean, to me, I'd be much more comfortable if we were having 20, 25, 30-point ranges instead of 60-point ranges. So try and get me over that hesitation.
Well, I would say that the market never accommodates what makes people comfortable. So this is just the environment we live in. In 2017, we were all saying, well, where's the pullback? I want to buy the dips, but it never came. So this is almost like a pendulum swinging in the opposite direction. It makes it harder for traders and investors to deal with the market. So you got to have a plan. But I'd say the biggest, thing that investors need to do and traders is to have a plan and stick to it. So you get a day like yesterday. If you're looking to buy stocks like Boeing, if you're looking to buy stocks, even Facebook, you take advantage of volatility by buying into weakness. As long as you don't believe there's a bear market coming, we don't believe that the trend has been broken. So it's not that volatility is going to go away. It's how you deal with it that matters.
Marc, a couple other stocks just on our list to talk about here. Twitter is one that has been weak as of late. It had a good candle yesterday, opened near the lows of 26.60, then rallied $1.50. What is a power gauge saying on a stock like Twitter? Because this is a stock that a lot of people were hoping for a pullback in. You've got the pullback here now. Thoughts on this one?
Well, power gauge was bullish beginning in mid-October through mid-January. It's now neutral. So you found support at our long-term moving average line here at the 28 level, 27, 28. I think from a valuation point of view, this really got out of hand. And so the pullback here, I think, is not a buying opportunity as much as it is the opportunity to see it bounce. And if you didn't get out, see a 50% retracement, say, of the move from 36 to 27. So we're talking 31, 32. I think it's an opportunity to get out. I don't think they have a viable business model personally. And, the earnings just aren't there. The ad revenues are not what they are for Google or Facebook. So I think there was a big story attached to Twitter, but I don't think it's going to back it up in terms of earnings. Again, they report on April 25th as well. You got to be really mindful of the April earnings dates because that's make or break time for this market. And as you point out, with the volatility the way it is, the market's going to be unforgiving if you disappoint.
Couple stocks from our chat that they're talking about. DC talking about Burlington Stores, BURL stock. You don't find a lot of retailers making new all-time highs, but here is one of them. Do you stay on the Burlington train here, Marc? What's the power gauge saying on BURL?
Well, it's neutral with negative money flow. The money flow has been negative for all the retailers, even the ones with positive ratings like Macy's and Ross stores. I think you stay on the train, but you have a close stop. What I said in my weekly market letter last week was the retailers look like they're turning around, and you want to go with the ones that are making new highs. So if the listener or viewer is smart enough to have gotten into Burlington, I would stay with it. But I think it's a sale between here and 140. That's where the upper volatility bands are. They're selling in there, but the stock is clearly outperforming the market. This is one of the few retailers that's got very positive earnings growth. The question is, are the fundamentals valuations stretched? And I think they are. If you look at the valuation metrics, which are part of the Chaikin power gauge, they're selling at a very high price to sales ratio for the retail, price to book value. All the standard valuation metrics are very stretched. Makes it hard for the stock to sustain itself much above that 140 level.
This is what I love about Marc, because you get so many traders, especially watching, on CNBC, and they're just go with the flow. They're momentum traders. If the trend is up, they're bullish. If the trend is down, they're bearish. But Marc incorporates all the fundamentals into his analysis, into his power gauge as well. And you'll find a stock like Burlington's going straight up, and he'll say, be cautious. You won't find any analysts out there coming on CNBC. They'll say, oh, this stock's going straight up. It's been going well. I mean, that's what we love about you, Marc, because you incorporate all that other stuff, not only the technicals, the fundamentals, and you're not scared to make a contrarian call too.
Well, I really appreciate the kind words. You've made up for sandbagging me by getting me on there without telling me we were live. So
that was Spencer's fault.
That's
That was
Spencer.
Spencer's fault.
Yeah.
All right,
one
I'll take the blame for that.
One other group I'll talk about are the brokerage stocks. E-Trade looks like a real buy to me. It bounced off a low. It had a nice day yesterday. And I think E-Trade, TD Ameritrade, these are good stocks that are benefiting from public participation in the markets. And that's the interesting thing. Even though we've had the kind of volatility that normally spooks people, traders are still moving money around, and that's great for the online brokers.
Marc, last one. We got bank earnings next Friday, a week from tomorrow. Wells Fargo, Goldman Sachs, Citi, I believe, maybe one more, Bank of America. Thoughts on that?
Well, I think that's going to be the key benchmark and the key metric that's going to determine whether we break out above the resistance at 2670 to 2700 or fall back down. I think earnings are going to be really good. Wells Fargo has its problems. I'd avoid there, but Citicorp was just upgraded, as I mentioned earlier, by UBS this morning. Like Goldman Sachs, like Morgan Stanley, like Raymond James, like JP Morgan. Not all of these have bullish ratings because they haven't really turned around from those big downtrends. But I think if the bank earnings come in as I expect them to, extremely strong, and particularly if the guidance from people like Jamie Dimon, and you got a hint of that this morning, by the way. Jamie Dimon this morning said he thinks people aren't as tuned into the fact that the Fed may have to be more aggressive at raising rates. Well, the only reason you have to be more aggressive at raising rates is if the economy is stronger than people think. And so rising rates are good for the banks. How do we know that? Because as the interest rates were dropping here for the last 5 weeks, the banks were dropping as well. So we want to see rising rates. We've seen them for the last 4 days. That's another reason I think that W bottom is forming. If we see rising rates into the earnings on the 13th, next Friday, then I think you're going to see the banks really do well here from that point on.
Marc Chaikin has been on with us. Chaikin Analytics is his site. Marc, thanks so much for the time today. Have a good one.
My pleasure. Enjoy, guys.
All right. Where are we at now in Mr. Market?
SPOOs are up 14 and a quarter now at 26.61 and a quarter. Holding mid-range on the day here. We missed a few stocks in the chat. Let's cover those real quick. Ed Parker wants to know if Amazon's going back to 1,500. Boy, oh boy, you had a nice triple bottom there at 13. It's called 1355 area. And now you're clearing a triple top. Oh, man, there's these big ranges. It's hard.
It looks good.
Yeah,
it looks
boy,
good to me on a pullback, though.
Yeah.
I don't want to chase, but, man, you know what? I think it sees 1,500 before it sees 14 or 1,300. But I guess for 1433, so we can't consider that because we're 20 more points here today. But I don't know. I think it could see 1,500.
I could see a target today if this market continues to be strong. Double top at 55.57, 55.47, and 55.90. So
14.55.
There's a target. I don't know if you're looking longer term or short term, but the longer it takes to take out that double top today, it may fade, but that's a nice area, sure, within the average range. Jazz is asking about FedEx versus UPS. FedEx chart, good earnings report that kind of hit it. Now that looks like it's forming a base there too. Let me pull up the UPS chart as well. They both look the same. I don't know. I guess if I had to flip a coin and go with one, overall, FedEx has been the better performer. So that's
yes, it has.
So that's
FedEx has been the better performer. The valuation on UPS is more attractive. Plus, I love the divvies, and I get 3.4% on UPS. So the value guy in me likes UPS. But just knowing who's been the better performer, it has been FedEx. I don't know. The market continues to rebound. I don't think you can go wrong with either of these stocks.
Okay. Yep. Boy, you look at these charts and then you look at the S&P.
It's unbelievable.
Yeah.
Over the weekend, I was saying everything looked like hell, and it's unbelievable what one day on the charts can change. And this is what traders are all about. You've got to be able to change your opinion. So, I thought over the weekend, I was like, man, if we take out those lows, we are in big trouble. And we talked about that. We did not take out those lows. We challenged them. We challenged those lows for 2 days. We challenged those lows. and the challenge held. So you've got to say, hey, with yesterday's tape rallying as strong as we were on that terrible, news of, the tariffs and stuff, I mean, that was telling you that there's people who want to buy out here, and it's got to respect those people.
All right, we're caught up with the stocks here in the chat. 8:30 imbalance here, Dennis, and everybody buying this morning. Going to buy imbalance?
No, very small. Square of note, 81,000 to buy in Square SQ. That one is of note. They're small across the board. I just hard to even say there's anything, really of note here, but it's early. Institutions know there's a lot of volatility. They don't want to show their hands this early. They don't want to tip off their hands. So they're just not posting their orders until later on. And that's why
they don't know what to do.
So
they don't know what to do.
They don't know what to do either. You're right. Like you come in, they're like, oh, we're confident. We're coming in here buying today. They're wishy-washy too. I mean, it's tough. So here we are. We're bullish here. But like I said, I'm not chasing this market. I'm not coming here buying everything this morning because yesterday we were just looking, at 256. I mean, here we are now. We're 265. You're buying 70 handles above where you could buy yesterday morning. So, obviously the call was to buy yesterday, but I wasn't making that call because we didn't know if it was going to pass the test. We know now. So we have more information. So now it's about buying the pullbacks. And I think you're going to get I don't think we're going straight to 280, even though I said I think we see 280 before we see 250 on the SPY. I think you're going to get another shot in the, not necessarily 257, 258, but I think you get 261, 262. Maybe over the course of the next couple of days, we get another headline that drives us down. I mean, all it would take is, some political uncertainty or even, something happen with North Korea again, which we haven't heard from a long time over there, to spook the market. The market is still spooked a little bit, even though the buy the dippers are taking charge.
Let me throw something out here. Okay.
Yeah, but
I'm looking at the spider here. How about
are you still trying to get me on a bet?
267.33 versus 263.33.
No, it's too short.
Oh,
no.
For a launch.
No, it's too
Mr.
short.
Bull.
That's too short of a bet. Who knows? That could do both of those things on the next trading hour. So there's too much job here for that call.
Okay.
I'm just saying I agree with Marc. I think you got this long-term W forming. But that long-term W is still intact. We lose 100 S&P points from here. We're still intact with that pattern. So you got to respect that too. You're never going to get the absolute bottom. So I think if you're buying here now for your long-term investment portfolio, I think you're going to be happy doing that. If you're a trader though, and you're a day trader and you're coming in here buying, you're chasing. So it depends on your time horizon. If you're listening to the show, and we have obviously traders and investors who listen to the show. If you're listening to this show, like I said yesterday, I said as an investor, I think if you're nibbling, you'll be happy you're nibbling. Well, obviously, if you were nibbling yesterday, you were really happy today. You wish you were not just nibbling, but physically biting the stocks yesterday on that pullback. But I still say, nibbling is always the best investment choice. Just slowly moving your money in. There's so many people who gets a big chunk of cash and then put it all in the market at one time. That's the worst thing you possibly do and as an investment because it's all market timing. I mean, if you're buying at the wrong time, and we know there's been some terrible times to buy stocks over the course of 25 years that I've been trading and the course of, the 100 years that Joel has been trading, there's been some definitely
102
years that Joel's been trading. There's some terrible, times. So as an investor, it's always good to, dollar cost average or however you want to do, slowly buy the market. I try to buy a little bit of stock with new money that I'm making, and obviously I'm making it from my trading. I try to put that in my invest portfolio. I try to sift it in there, just slow and steady. Like I've got it in my calendar, actually. My wife put it in there, buy stocks, and she's got it in there like once every 2 weeks. So every couple of weeks, I just look through the charts and I look at a stock, that maybe I like, and I put a little bit in my long-term investment portfolio. So I'm slowly accumulating stocks over the course of years because I'm not a great long-term timer. I'm a trader short-term, and it's hard to time things long-term. But what I'm saying here is I can see the potential here for this market to be making new highs in the time horizon that Marc Chaikin just gave at 8:15. I could see this market making new highs in 2 to 3 months.
Okay, real quick, DC1, our Rob Hood about the move here, and FND, Floor and Decor Holdings, probably got the boost yesterday, maybe from the housing, Lennar housing numbers. That might be a little bit of a stretch. Big run. I would just try and look at average daily ranges on this thing because eventually it's going to calm down. A huge range yesterday on huge volume. So 50 as opposed to the 56.70, which was the all-time high. Keep an eye on that all-time closing high of 56.31. Let's cover another stock here.
Well, can we do that after our guest?
Okay.
Let's do it after our guest. It's 8:35. We have to take a quick break and grab Paul Mladjenovic. He is the author of Stock Investing for Dummies and The Raving Capitalist. We'll be back in a jiffy with Paul. Welcome back, everyone, to PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick, now joined by Paul Mladjenovic, author of Stock Investing for Dummies and The Raving Capitalist. Paul, how's it going?
Oh, fantastic. Thank you for having me on your program.
So one thing that we were talking about actually on the pre-market show this morning, it was just Joel, Dennis, and myself, was how part of what made last year so unique was the fact that, you know, traditionally Wall Street loves a reason to freak out, and nobody really freaked out about anything last year. All those threats of war with North Korea didn't amount to really anything. And this year it's the exact opposite, right? There is way more volatility. People are much more inclined to freak out about headlines. How have you been, taking that transition or handling it?
Well, let's see, because I have, when I'm doing my seminars and dealing with my clients, some are speculators and some are, investors. For me, my biggest focus, which changed a few years, is obviously, I wrote the book Stock Investing for Dummies, but maybe my real inclination is dividend investing for dummies. In other words, I'm a dividend investor. And for me, this is an example of how the stock market could be one way, but the underlying companies attached to those stocks are a totally different way. Most of the companies, in terms of their economic status, are generally sound, having good income coming in. Many of them will benefit from the Tax Act that was recently passed. So for me, I think for those people who are looking for dividend growth and looking for long-term plays, they'll have to really, swallow hard and think about using some of these scary down days as a buying opportunity. Now, the other folks that are out there, there's a lot of people there who, maybe not long-term investor, maybe they're going to be retiring this year or whatever. They should consider doing stop loss orders and the like. And the other thing is that when the market was rising invariably last year, I told some of my speculative students, I said, now's the time to start looking for bearish opportunities. And I thought, one of them, I don't know how specific I can get because I'm not really telling people to buy it or whatever, but, Tesla showed obviously some, huge pullbacks, which would have been like some great gains for the people out there who were speculating from a bearish point of view. But for long-term investors, obviously keep a little cash on the sideline anyway, but only focus on dividend growth stocks, and I think you'll be okay in the long run.
So are you advising your clients to just get into the market and use the cash, all the cash that they can, and be fully invested?
Well, not fully, but I'm just saying to you that now they should start looking around for the solid companies that have good dividends and good dividend growth, because the buying opportunities are there now. And there's even some great ETFs for this as well. Because I think that people now, as they're looking for their long term, look, even if you're somebody in your 30s and 40s, if you were concentrated on dividend growth back then, right now you'd have stock positions where the annual dividends are larger than your initial investment. If you take a look, this is certainly how, the Warren Buffett approach as well. So I just think that there's a remarkable opportunities for locking in some juicy yields that people who are looking for a long-term income and growing income, they should be considering.
Hey, Paul, Dennis Dick here. I just wanted you to expand on that because that is how I've structured my portfolio the 20 years that I've been investing in the markets. I've always focused on dividend stocks. I'm looking to buy a few right now too. What's on your radar?
Well, let's see. Yeah. Again, I'm always skittish when it comes to some specifics out loud in the marketplace. But I'll say it as long as obviously people know out there. Look, check with your financial advisors, do due diligence, etc. But I like one of my favorites is an ETF with the symbol letters HDV, and I like that one because when you take a look at the portfolio, they stick with the companies that are like in the consumer staples and in other venues that are good no matter how good or bad the economy is. Fortunately, the economy is strong. The jobs report came out very well, so they'll continue to do well. So I like that one. HDV is one of my favorites for people who are looking for growth long term. Because when you take a look, because I tell now that one pulled back as well, but you end up finding out when they pull back, other income hunters see the dividend yield, so they rush in and buying it. So it buoys it. It keeps almost to a floor to the stock itself. So for me, that's a great way of playing it, and then being there for the long term. So I'm with you on this stuff, definitely.
Okay, so Paul, this is a little bit contrarian to what's going on with the markets with rising interest rates. So are you taking the position here that hey, the rates are going to be going up here, maybe 2 or 3 more hikes this year. But, overall, we're still at historically low rates, and no better place to get some return on dividend stocks, because if rates really take off and get rampant inflation, you don't want to be holding these dividend stocks.
Well, here's the thing. My thinking is the following, because obviously, I thought the stock market was in a bubble, last year. Not a dangerous one, but for me, what you're referencing with the interest rate potential hikes, to me, I think the biggest danger out there is the one I don't hear very much in the headlines, and that's I think that the debt markets, the bond markets, I'd stay away from that. Beside the fact that the yields are not that good, I mean, those things become precarious when interest rates start to rise, because I think it's unsustainable in that regard, and. So I think that's part of my reasoning, is that I like the consumer staples, I like the utilities, et cetera, especially now. Because let's face it, the dividends, where are they coming from? Dividends don't come from stocks. Dividend comes from the company's operations. And there's a lot more stability and strength there than you've seen in the stock market. Because you know how it gets to being like a schizophrenic thing. Stocks, you could have a company reporting a profit and the stock could go down because the profit wasn't as good as expected. You could have companies losing money hand over fist and see their stock skyrocketing, like, again, Tesla last year. You know what I mean? So for me, I just stick to the fundamentals. And to me, I look at the companies themselves, and the ones that always have room for growth and have shown it for the last 10 plus years, I'll stick with that. And rising interest rates don't bother me so much in terms of this type of investment, but it would scare me tremendously if I was in fixed interest vehicles like long-term bonds, especially junk bonds.
That actually leads into my question, Paul. So are you concerned at all that the S&P 500 dividend yield crossed below the 2-year Treasury yield a few months ago? Does that type of trend interest you at all or concern you?
No, not so much. I mean, obviously, the S&P has a broad brush of stocks out there, including some that have low dividends, or in some cases no dividends when they calculate it. I like the ones that go for just bifurcate the S&P and show me dividend yields of north of 3%. So I'm not worried about signals such as that, at least not yet. So I'm still watching the bond market and see what happens with those interest rates as well. So again, that doesn't worry me at this point.
Can you give us a couple? You mentioned one ETF. Are there individual dividend stocks that you're just eyeing? You don't have to say you're buying or whatever, but stocks that interest you in some way.
Well, right now I like some of the ones that the folks out there could be cherry picking. I mean, I like Duke Energy is not bad. I think that one's been fairly strong. P&G continues to be a decent long-term choice in my place. But I think for a lot of people out there, I prefer the ETFs. Like, for example, the one I mentioned with the HDV, that's a fairly high-priced ETF. That's like in the 80s, you know. But there's some other ones out there that I think are perfect for some of the investors out there with more modest means. Like there's one with the symbol PEY. Okay, that has like a similar approach. Again, you know, dividend growth and dividend leaders. And that one could be had for, you know, less than $20 a share, you know, for the people out there who are looking to, you know, add another dividend player to their portfolio without, you know, plucking out a lot of money.
All right. Gold. I want to ask you about gold here. Trying to break out over 1350, just gets turned back many times. Where's gold fitting into your investment strategies?
Well, the thing is, since the election results, I've been less worried about things like, I mean, sometimes I hear even some of the people that I know who worried about economic collapse and whatever, and they see gold as a safe harbor. To me, I thought that it was a real game changer in the 2016 elections in terms of what the outcome will be. I feel that inflation will become a growing danger. So I see gold and even silver to continue to play a role in people's portfolios. You know, 5% or less. It doesn't have to be a huge amount, but I feel that if people recall what happened in the late 1970s, I mean, you know, there's a lot of hallmarks that are happening that are very similar. And back in the late 1970s, what was it? Rising interest rates, inflation, energy crisis, Middle East conflict. A lot of those things are going to play up again. And what happened with gold in the late 1970s? It's, you know, it had an amazing run from, what was it, like under 100 to, you know, touching 850 by January of 1980. So I feel that the silver and gold are basing nicely. I mean, they've been in a bearish, protracted struggle, you know, in recent years. But I think that as more and more people see the inflationary concerns and see more of the paper asset concern, I think that the next leg of their bear market could easily start, in the very near future, in the coming months, or certainly sometime this year. So I'm generally bullish on the gold and silver.
Question from our chat here. Do you have thoughts on HA?
Excuse me?
Ticker HA.
Hold on a second. Let me just.
Hawaiian. That's Hawaiian Holdings Airlines.
Oh, it's Hawaiian Holdings.
Yeah.
Oh, I don't want to comment on that because I haven't seen the fundamentals of that one yet, so I'll have to decline on that one. Feel free if you want to give them my email and send it to me. I'm happy to take a look at it, and respond to people via email if you like. I mean, I think as I look at it now, okay, low PE ratio. It's got a dividend, small dividend. It won't do badly. I think it'll do fine. Nothing that I see that's a spectacular potential, but not a bad consideration. It's at 40 and change, so good luck with that one.
All right,
okay, I don't feel anything negative about that one.
All right, I'll give you one more, and you don't have to comment if you haven't seen the fundamentals either. Bed Bath & Beyond BBBY. Have you seen that one?
Well, see, I'm personally skittish about retail stocks until some of the things stabilize. There's obviously the general economy has strengthened, but the retail has gone through general retail has gone through a bloodbath in recent years, and I think the Bed Bath & Beyond. Correct me if I'm wrong. I think they had done bankruptcy somewhat time way back when, and they were reorganizing. So maybe their numbers have improved because they were able to clear off some of their debt. But for now, I'm not that crazy about. It has a low PE ratio. It's probably maybe safer than some other choices. But I'm not crazy about the real estate, about the retail sector at this point. So maybe down the road I will, but for now I'm not.
All right, Paul Mladjenovic. He's an author of several books: Stock Investing for Dummies, Dividend Investing for Dummies, The Raving Capitalist. Paul, thanks so much for the time today. Have a good one.
Thank you again. Have a wonderful day.
All right, 8:49 now, about 10 minutes left in today's show. Was there anything that you guys wanted to hit on that we missed in the chat, or if they were on your list?
The ratings. There was a lot of ratings here today, and obviously big one here coming out from what was it, UBS, the Micron?
Yes, sir. Start initiated coverage. slapped with a sell rating and a $35 price target.
Wowzers.
Dennis.
You know what I'm saying? I don't know why my voice is really broken up here on the show, but come to Papa. I want this thing back at 50 now. So it's 52.5. I don't know if I'm going to get a shot, but I want to. It had an awesome candle yesterday. I think the pullback today is a buying opportunity for MU. Obviously, I've been on the record saying that I think this could be, an $80 or $100 stock eventually too. So I have obviously bought some at 60, which is a little bit soon. I only bought 1/3 of my position. I wanted to buy the other third. I was scared yesterday. I shouldn't have been because I talked about 50. It would have been the perfect buying to buy another third of it. I might actually pay up a little bit on this and buy this in the 52 handle today, that other third position. So I'm fading the UBS sell rating on this and buying the Micron pullback.
Same note from the Micron was TXN, Texas Instruments. Again, sell rating, $85 price target.
Again, great candle yesterday. Bounced off the 100 support. I don't think you're getting back down to $100 here today, but let's say if we get back down to half of that, 102, 103, I think you'll find buyers. So buying the pullback in Texas Instruments too. Obviously here, fading UBS calls.
All right, let's go through the other list or the rest of the bigger ratings that I saw. I wanted to hit on FNSR, getting an upgrade on Morgan Stanley today, upgrading to overweight. And I didn't see a price target, but overweight.
Oh, what an ugly looking chart.
What an absolute disaster stock. I looked at buying at this one. I looked a couple times because from a valuation perspective, it starts to get, more attractive. But man, this has been just an awful stock. So I got to do more homework from a value perspective to see if there's value down here at 14, 15. I'm thinking there might be, and you do have the long-term technical support. If you go out to the monthlies, we had, levels down here at 10, $12 for a long time. I'm not paying up 90 cents here today though, because it's such a perennial dog. It seems like this stock just keeps, or every time the stock gets a lift, it seems to find more sellers.
Trading up in the pre-market 99 cents. So that is a big move at 15.69. That takes you out of yesterday's range. It actually challenges. You had two highs at 57, 15.79 and 88. So for me, I agree with you on this one. This is opening into some short-term resistance. AMD they stifled downgraded Intel and upgraded AMD.
Fair trade.
Yeah, what do you think about this one, Dennis? That AMD.
I played it last night. On that note, it came out, and I actually bought some AMD and shorted some Intel on that. I've taken that off now because Intel obviously trading down, and it's priced now. It's priced that ratings change in. Long term here on AMD, I've still got a small investment position. Obviously, I sold half it up at 13.5. I wish I would have sold it all because I'd been happy to maybe come back, at $9 yesterday, when the low was there, and maybe reaccumulate some position. But I don't know. AMD is just the jury is still out on this one. I like Intel a lot better. I wish I would have went with Intel instead of AMD back, when I made this decision. That was after the CNBC fake news on the Tesla thing that spooked me out of my Intel and got me into AMD, and I never readjusted that, and I should have readjusted immediately when it came out that information was incorrect. So anyways, after this, I don't know. I'm not in love with my AMD position at all.
TT Mac levels on Illinois Tool Works, please. I don't know who hinted that Uncle Warren has this as acquisition candidate, but looking at the rally from yesterday, nice rally. But boy, I don't think this thing is out of the woods until you can clear that double top at 160.59 and 160.63, and that's still a couple bucks away. So there's your major resistance. And the other thing that about that, I mean, wasn't Warren getting involved in General Electric last week before I left? And
and Faber came on and said that wasn't the case.
Okay, all right, got
and Faber's CNBC is connected to Warren Buffett. We know CNBC, obviously has a relationship with Warren Buffett, and he came on a few days ago and said that wasn't the case. That there was, maybe ideas of him doing some type of preferred or interest in some of the assets, and that was still a possibility, but. I think he said he wasn't taking an equity stake here at these prices. So GE has come down since then. That being said, GE has got the potential for a little W for him in here too. No, a little mini one.
If I would have seen this yesterday, the low of the move 1273, that was backed up by a 1282 low, then a 1280
Opened right at it,
and
too.
1279 though. So even GE participated yesterday.
It's a rally. GE participates.
It is a rally. Goldman still teases me about that stock because when I traded it oldie, at that time it was a top component in the S&P. And, if I caught a move, you felt the move and the spoons coming, just GE would just automatically move as well. But now it's falling out of the top 10 components. Qualcomm, and no saga or no news in Qualcomm lately. Trying to form a bottom here. It does look kind of itchy. Looks like we're clearing a double top here at 55. Yeah. This one looks okay.
They had an initiation today. Initiation for UBS and neutral with a $56 price target.
And again, my pet peeve, I've said this on the show before, is neutral ratings. It's just useless to me. Like, why bother initiating something at neutral? I understand if you go to neutral after you initiate with a buy or a sell, but what are you trying to tell me? You initiated a neutral? Well, it tells me to do nothing. So initiate a buy, initiate a sell. If you want to move to neutral afterwards, I get that. But initiating at neutral, wasting my time. So anyways, we know UBS here. I've been fading both of theirs. I said I would buy the Micron pullback. I said I was interested in the Texas Instruments pullback. Neutral, I can't fade anything there because it's just a neutral rating. I do own Qualcomm in the invest portfolio. Put it in there when there was all the talk up at $62. Obviously, I've taken some heat on this one. Sean Udall says he likes it long term. I still like it long term. I bought it staying there was value. I didn't see it going down to 55, although, the market has collapsed since then. So I was wrong, obviously, to put it in my portfolio at those prices. But I won't argue with it. 4% dividend, if you're putting it in here, I think if you look at the stock 10 years from now, you're happy you did it.
All right. Ford, Green Ghost in the Google chat is asking about Ford. Nice day yesterday, along with the rest of the market. Boy.
Not only a nice day, Joel, just an unbelievable day. Because Ford and GM their autos were listed right on the tariffs. Okay. So to come back and close up on that day, that was impressive.
Okay, I see a big level here, 1144. Now, there was the day they got an upgrade from somebody. I believe it was Morgan Stanley. And then later in the day, they came out with some recalls, and it might have been a little bit of a rough day in the market. But you hit 1144. Early in the session, then you sold off. You ended up going back under $10. So here you are. You close up near that area. So yesterday's high was 1136. You have that little high at 1144. Man, I think I'd have to wait for over 1150, Dennis. Is there just a ton of paper in there at 1150? Can you see that?
Where are you looking? Ford? Let's go check it out. Go into the book here right now. I went to the book in a while. Let's go check out the book on Ford. 11, yeah, littered from 1140 all the way up to 1150. But again, it trades such volume, we could chew through that. So if you want to know, 1137, 55,000, 1140, 97,000, 1145, 88,000 to sell. 1148, 37,000, 1149, 42,000, 1150, 250,000 to sell. 1152, 64,000 to sell. I mean, the book is chock full. If you want to go all the way up to $12, they got 580,000 shares up there, but there's all kinds of stock to chew through. And that's just because it hasn't been there for a while. So the book fills up from its institutional longer term orders, and it makes it thicker, makes it harder sledding. But it takes is an upgrade or something, and it can chew through a lot of that stock.
You're getting a running start though, right?
You are.
Yep. With the 11.
You get through 1150, it does open up a bit. You're right. You got to get through 1150. Then you'd go up to 1175 is the next big level.
Yeah, and for something like this, I mean, I like to go to look at the 9-day average range to kind of get a feel for if a stock makes a high or a low early in the session, going to have a trend day. Ford, just to give you an example here. The 9-day average true range is 0.28. So that would take you over that 1150 level. Rob Hood just mentioned some of the retailers here. I just looked at that Macy's chart, and that gave you a gap fill after earnings, right? You had a gap down to 27.47, and you got down to 27.18. So you had a gap fill there. Now a nice rally. Triple top to contend with at the 30-50 area. I missed Twitter yesterday. I was talking since earnings that I was going to buy it when it filled the gap, and I blinked and it did fill the gap. from its earnings day. So miss that one. I'd like to see it come back down there one more time. All right, 9 a.m. Dennis, any final thoughts for today's session, Mr. Bull?
I like pullbacks here. So I'm hoping the market can give me a pullback here to get into some of these stocks. That's why, like Spinner was saying, to be buying the Micron pullback. So would I. I like the Micron pullback here this morning. I think the stock could go positive here by the end of the day. There's a lot of analyst ratings here, so look at those downgrades, and if there's stocks that were on your radar, maybe they give you a second shot. I mean, Intel has been slapped with Intel was a downgrade too from Stifel. It was a nice candle yesterday, so on a pullback, I like that one too. So that's where I'm looking here right now. I'm looking for pullbacks to buy.
All right, that is going to be it for the show today, folks. Looking ahead to tomorrow, we are going to be joined by someone who has not joined the show. Oh gosh, how long has it been since he was on? I want to say 2 years. Ron Insana will join.
Oh, really?
Nice. I'm going to find out when's the last time he was on the show.
More 2 years.
Ron Insana was last on our show in oh wow, my calendar doesn't even go back. It seems like 2015. All right. Well, Ron Insana will be on the show tomorrow at 8:35. Obviously, longtime market veteran. We'll get his thoughts on everything and ask him your questions. That'll be on tomorrow's show. But if you want to catch any part of today's show again, you can do that on our podcast, iTunes, SoundCloud, Stitcher, or YouTube. Thanks to our guests today, Marc Chaikin and Paul Mladjenovic, for joining us. Thank you to all of those of you who joined us in our YouTube chats and our PreMarket.benzinga.com chat. That chat is active throughout the day as well. I do want to mention that. So if you, just because the show's over does not mean the chat's over. So hop in there anytime, and there are people talking about the market there. That's it for us today, folks. Have a good rest of your day. We'll be back with you on Friday.